Okay, we're looking at the S&P cash market. You can see from this low back in November, we rallied 90 trading days into high. From this low back in June of 2016, we rallied 180 days into high. So ideally, the S&P should start selling off. Monday, of course, is the spring equinox, so there's a high probability that the S&P will turn down in sync with these cycles. Again, we need a close below 2353 to confirm a correction underway, but that may be tested on Monday or Tuesday, so keep an eye on it. Also, if you're looking forward here to gold, you see it found support on a 180-degree line on the dynamic square of 9. It's now testing the 270-degree line at 1230. If it breaks above that, it goes to 1265, which is a key resistance level. If you close above that, you go to 1302, which you're also taking out a monthly Gann line. And when you get above 1302, then you get panic buying in gold. Now, maybe there's something to this because it does appear the dollar's starting to weaken, and it makes sense that gold would rally if the dollar starts to weaken. I think the dollar index could fall back to 96.77. If it gets below that, then something more serious is going on. So keep an eye on that level. Also, if you're looking at oil, we have a 104-week cycle, 90-week cycle, both called the low for this week. If you get above 56.66, you could go to 66.86. So I'm not saying that's going to happen. I'm saying let's see what happens when you get up to 56 area. If you can take that out, then yeah, maybe this rally would be more significant. And if you're looking at bonds, it does appear we just bounced off a 5/8 retracement at 146.11. We could go back to 152.17, which is a 50% retracement. That's pretty easy to imagine. If you get above that, you'll see panic buying in bonds. And you can imagine the reason for that. If the stock market sells off hard, there will be a flight to quality out of stocks into bonds. So keep that in mind. And another mark you want to watch as sort of a canary in the coal mine is the XRT, the retail sector index. If you take out this 1/3 zero line at 41.68, you could see a waterfall decline. Now, maybe you might argue that, hey, it's just brick and mortar stores giving up their sales to Amazon online sales. But even here, you can see a negative negative divergence between RSI and price. It looks like Amazon is rolling over. So if both the XRT, brick and mortar, and online sales are going down, you know something big is happening. And an Amazonian waterfall would be if you see this parabolic line give way for Amazon, and then you would see a huge sell-off. So I'm watching Amazon as, not because I'm interested in the stock itself, I'm interested in how it relates to the impending sell-off in the stock market. I think this would be a big sign that things are in deep trouble if the consumer is not spending anymore.